Hello and welcome to this edition of Closing Trades. It's relatively flat for the Nifty like we just highlighted, and pretty much all the action is within the FMCG basket. Beta Unilever, which is topping the charts with a 3% gain. Auto Godrej Consumer, which has lapped up almost a 6% gain. Dabur, which is holding higher by 3.5%. And Nestle, Tata Consumer as well, jumping onto the bandwagon. That's where you're seeing a meaningful move, about 1.5% for Nestle and 1.2% higher for Tata Consumer as well. Other than that, there's ITC, Reliance, Asian Paints. These are also the big boys which are joining into the move today. But on the flip side, BEL is seeing some significant profit taking, stock lower by 2.25% after pretty much a one-way move up for the last 1 month or so, if not more. Technology is a little bit under the weather. Remember, you've got TCS reporting its numbers on Thursday post-market hours, so that's looking a little abated. So is the case with Infosys, TechM, HCL Technologies, and the auto plays as well really are not doing a whole lot. Maruti down about almost 1%, Hero MotoCorp 2 down by about almost 1% as we speak. But it's interesting across the broader market because that's where you have a more definitive move wherein the declines are the ones which are taking over, and there too, Srishti, a lot of stock-specific news.
Well, indeed, and specifically from the likes of Nykaa, Petronet, LNG, these stocks are boarding up well. Firstly, let's talk about Nykaa. That stock is in focus on the back of its updates. The stock holding on to the gains of almost 1% right now. While Info Edge, that stock is down in today's trading session because sequentially, the company just say that the revenues could actually drop by almost 35%. And look at the move right now. It's almost a 3.5% cut coming in on Info Edge. But on the flip side, after that Motilal Oswal upgrade coming in on Petronet LNG, that stock is holding up well with gains of over 2% right now. They have upgraded the rating to a buy from a neutral rating earlier and have hiked the target price to 410 rupees. That stock is gaining momentum. They are saying that the sharp tariff cut at the Dahej can lead to industry-wide pressure, while there are concerns about the potential tariff cut. But they are also pricing in a 20% decline in the tariff at the Dahej and Kochi terminals in FY28, and they assume a 10% tariff cut in Dahej and Kochi in FY28. That's they are saying, but the valuations are at a rock bottom at this point in time, and hence the upgrade coming in on this particular counter. So all in all, a lot of these movers are there indeed, but on the index front, it's quite a day of consolidation is what we are seeing right now, Snehi.
You know, very quiet, very silent day coming in for our markets. A few stocks that are making the buzz today. In fact, on the flip side, you have some pressure building in on Equitas Small Finance Bank. That stock is lower by 6% as we speak on the back of their net slippages in their quarter one update going up drastically on a sequential basis. So 6% cut coming over there. Other than that, you have stocks that have been a buzz over the course of the day, the likes of BEML, Cochin Shipyard, Petronet LNG, like Shrishti mentioned. You have a note coming in from ICICI Securities on telecom, on the back of which Bharti Airtel, Vodafone, Bharti Hexacom are in focus. In fact, ICICI Securities has downgraded Bharti Hexacom, and which is why the stock is under pressure as we speak. But let's connect with Kunal, who's joining us in the studio to get a better sense of what we can make of the trading day that we've seen. And Kunal, good afternoon. Hi, thanks for joining us. Give us a sense of what you've made of the market move. Absolutely nothing is what we've seen on the index, but broader market, a lot of action coming in. What's your view on the day we've had today?
Yeah, it's more listless towards the index, but I think there are a lot many individual stocks which are still showing signs of good price volume accumulation. So I think over the last few days, what we've seen that the markets have been a lot more specific towards very few certain kind of stocks, not sectors going into trend. We've seen divergent sectors actually playing part in the last 4-5 days, where the Nifty is corrected by 200 to 50 odd points. So I think from 25,700 thereabouts, where we made a high for the Nifty in the previous week, towards 25,400, 500, where we are trading right now. It's been a very mild kind of a profit taking for the index. But then I think in that context, we've seen the the defensive sector, so-called, or the underperforming sectors making a slight bit of a comeback. You saw the pharma index making, I think, giving up 2% gains in the previous week. Many of the pharma stocks are continuing to see positive price action. Large cap names like Sun Pharma. Then you have Glenmark, which has been looking very strong. And then many of the FMCG counters today are showing signs of a breakout yet again, led by HUL, Marico, etc. So I would probably believe that we are into that phase where the markets are tilting back towards the defensive tilt. But then this, I think, as an overall play, could be considered to be quite positive, because when the market doesn't lose its texture, and when new sectors emerge out to be potential candidates of trend reversals, that's generally an indication that the uptrend is still intact. I would look at this 40-50 point dip or this 200 point dip in the last 1 week as a very good buying opportunity for an index trader.
Okay, let's welcome on board Dilip Bhatt as well and find out what he's making of the market. Dilip, hi, good afternoon. Good to have you on the show. We've moved up quite nicely. We were just a whisker away, really, 2% from that all-time peak, and then so much tariff uncertainty. And now you've got the earnings as well coming up. Where do you think the market is headed next?
Sure, I think market is still begging for a direction. I think the screen on the markets are clearly telling that they want to move ahead without any doubt. But I think somewhere the fundamentals will have to support them very strongly. This is what we feel, which is not what it is at the moment. So I think this quarterly results also may be a mixed bag, because the tariffs have still not been spelled out so far. And there may be some front loading in a few sectors. So that's why you'll find that the performance may be good, and in a few others it may be lagging. More important, I think, what is the management commentary going to be? That also is going to be very important. So I think my own sense is that markets driven by liquidity will continue to try to move ahead. But at the same time, the joker in the pack certainly are the FIIs, how they will behave, whether they are going to give a consistent support. If not, my own sense is that markets at best will spend some time sideways consolidating. I don't think that we can just, there will be any big correction. That's what I think. So I will wait for the markets to give direction once the fundamentals are very clear. But clearly, the valuations are very expensive.
All right, so the valuations are expensive for the markets right now. Hi, Dilip. But help us with your take on FMCG pack, because that's the clear star performer today. And yes, of course, the move is definitely backed by the good Q1 updates as well. But do you like the sector at this point in time? Because now that the defensives are making a comeback, what is your sense on the FMCG pack, and are the valuations justified at this point in time?
So two things. I think one is that valuations certainly are not cheap, but they were never cheap. But I think some of the factors that is really going to provide a good tailwind is, as what I also went through the pre-Q1 report of quite a few of them. So I think the volume growth is emerging, and more importantly, I think both the rural areas as well as the urban areas possibly will start showing a volume growth. So that is going to be a huge change from the past, because the volume growth had been very muted in most of the FMCG companies. And with inflation, I think cooling off quite a bit, I think that also will help them to shore up their EBITDA, because not all of them are going to take a price cut. So all said and done, I think over the next 2 to 3 quarters, we should see the momentum in FMCG stocks building up, because they had been lying low for quite some time, and possibly there will be some tailwind in their favor. So I think the FMCG stocks look good for a momentum and for possibly a short-term upward movement.
Okay, so that's the take on FMCG. Kunal, coming to you, today pharma looks interesting because after 11 sessions of buying, we've seen pharma in the red now finally. Do you believe you're spotting any opportunities here in Nifty Pharma now?
Yeah, I think there are a few names. So, it started off with, I think, Aurobindo Pharma seeing a short covering, Glenmark Pharma seeing a very good recovery in the last, I think this is the third or the fourth consecutive week for Glenmark Pharma, where the stock has recovered from, I think, 1500, 1550 mark to now 1850 plus levels where it's trading right now. So over the last, I think, 2-3 weeks, there has been, few traces where individual pharma stocks were looking attractive. But now I think, what we've also seen that some volume action kicking back again to the larger cap names on the pharma side, that's Sun Pharma. So that I think could be a precursor or an indicator that we could be looking at, resumption of uptrend for many of the individual pharma stocks. I would look at, few names over here. For example, I think at current levels also, Glenmark Pharma is something which looks attractive. The stock has been a lot more consistent in the last 2-3 weeks of this price uptrend. So I think keeping 1800 thereabouts as a trailing stop loss, traders could look at a hold or barn Glenmark Pharma further from current levels. I would look at 1900 to 1950 as a potential target range. Biocon is something which has started to spring back into a breakout mode. About 370, 375 levels. That's also something which looks attractive. So my sense is that the stock should be good for at least another 20 points on the upside, 390 thereabouts, so the very short term. Sun Pharma could be a potential contra bet at current levels. The stock is yet to show signs of a major volume, major price turnaround, but on the volumes and the way the price activity has happened today, I would believe that Sun Pharma over the next few days could also see a mild bit of a breakout on the upside.
Kunal, I just want to get back to the sector that we were discussing, FMCG. The fact that most quarterly updates are coming in positive. For Dabur, it was in line, but even Dabur is jumping up today. Do you sense a trend revival here? Because FMCG as a sector has been suppressed for many months now.
Yeah, and that's exactly what's happening. So it started off with, I think, Nestle and few other names which start to look attractive. Today morning, Godrej Consumers was up some 5-6%. That stock saw a follow-through up move. HUL started off with, I think, a couple of percentage points higher, and that stock has crossed 2400 levels. It's now on the verge of breaking the 200 DMA. And then you have other names like, for example, Marico saw a mild bit of an uptake. The stock saw a revival from its 50-day moving average a couple of days back. Colgate, I think, is the other stock which is also seeing a good revival from its minor swing lows. So what we are seeing right now is that the move which started off for few odd stocks is now getting into more of a volume aggressive move for many of the FMCG names. So what's happening could be that maybe the risk reward starts to look now very attractive into the FMCG pocket, and with some confidence building out into a few larger cap names on the FMCG pack, I think the money would start to flow back again into the slight underperforming names, and I think that's where one could find more trading opportunities. I would still believe that many of the FMCG stocks from here on, Nestle, HUL, etc., they could see a decent upside of at least another 3 to 5% over the very short term.
All right, so that's the take coming in on the FMCG pack. We got you the both fundamental as well as technical take. But one of the other counters that is under immense pressure today, that is Naukri, Info Edge. The company did come out with its update, wherein the Q1, the standalone business is expected to see a drop of 35% on a sequential basis on the top line. So that's the reason where we are seeing that Info Edge is almost down 4% right now, when the recruitment solutions is expected to post a revenue of 470 odd crores, 99 acres. There too a drop is expected, and others expected at 79 crores. But Kunal, give us your sense on how do you see Info Edge on the charts, and what do you make out of this 3.5% drop?
I think it's a concern for Info Edge or Naukri, because the stock over the last 2-3 months was just about going through a sideways patch. I was actually looking at the last 2-3 months of range for Info Edge. The stock was stuck into a band of 1400 to 1550 thereabouts, and now the stock is now trying to challenge back again this 1400 level. Now what happens is initially there is a wave where the stocks consolidate and there is an expectation that the stocks would break out on the upside, but when they are met with a very sharper degree of price correction, and that too on the higher volume side, we generally expect that the stocks eventually go into a turnaround in a breakdown mode. So I believe after today's price correction for Info Edge, the stock coming very close to that 1400 critical short-term support mark, eventually the supports should break for the stock over the near term. So I think for someone who's looking to buy the stock, you may probably wait out for some more time. I would expect 1350, 1320 as a good point where traders could look at a contra buy on Info Edge.
Okay, so that's a take on Info Edge. Dilip, want to come to you to get your sense on the entire telecom space. Seeing some deep pressure building in on Indus Tower and Bharti Hexacom, two of the stocks that ICICI Securities has today gone ahead and downgraded and also revised their target price. What are you making of the entire telecom space in light of everything that we've recently seen with Vodafone? Which stock do you believe is best placed here?
So I think, when the telecom stocks have really done pretty well in the last 6 months to 9 months. I think Vodafone, of course, has its own reasons for whatever is happening out over there. And there is no clarity on that particular portion, because some event or corporate event that is likely, which is what the market is pregnant with possibilities. So I think as far as telecom is concerned, I would say that it has had very good run, especially led by Bharti Telecom. And from here on, whether I would be looking forward for some further movement, I'm not sure. I think telecom I would play, if at all, more by way of a defensive sector from here, not for any proactive reasons. I would just wait and watch for a while before I look at this entire sector again. Not in a hurry to commit in this particular sector, because one thing is sure, the capital intensity of the business continues to remain pretty high, and things are very dynamic out over there. So not really in a hurry to commit to this sector at the moment.
Okay, not in a hurry to commit to at least the telecom space, but let's find out if Aditya is reading the same on the charts as well. Aditya, hi, afternoon. Good to have you on the show. Let's discuss the two stocks that we were flagging off, Indus Towers especially, and the pressure that the stock is seeing today. Do you sense that it could be headed in for more weekdays? And what about the leadership names like Bharti? Where do you see them headed on the charts?
Hi, good afternoon. Thanks for having the show. So I believe as far as telecom is concerned, they have had their good run up, and especially talking about Bharti and Indus Tower, both of them had a good run up. Today, Indus Tower is down a bit, but I don't see too much of a correction in Indus Tower going ahead. It could be more of a sideways consolidation in the stock from here on. On the downside, 400 to about 390 is a good support area for the stock. My sense is stock will come and find support somewhere on those areas and then enter into a good consolidation phase and then resume its uptrend. If anything, I would use this correction as an opportunity to look at going fresh long on Indus Tower close to about 390.95, and on the upside look for a target of 460 on the upside. So my take on Indus Tower is I don't see too much of a weakness coming into the stock. Stock has come out of a good consolidation phase. After an up move, we are seeing a bit of a correction, and that is likely to continue into a consolidation now. Talking of Bharti Airtel, I think Aisha, Bharti Airtel has had its own good share of run up. Now it's time for it to actually enter into some kind of a consolidation. From here on, I don't see Bharti Airtel hitting 20-50% kind of an upside immediately, 15 to 20% kind of an upside immediately. And if anything, my sense is it would actually witness some kind of a cool off or a correction to levels of 1940, 1950. So it's not a bad idea to book out some profits if you're sitting long and on decent profits in Bharti Airtel, and use any declines closer to about 1940, 1950 to initiate fresh long in the stock. From here on, I think 2100 to about 2070 is maximum that I see on Bharti Airtel.
All right, so that's the take coming in on select telecom counters. Let's watch out for that. But Dilip, the other space that is doing very well today is the whole cap goods space, and one of the other stocks that I wish to flag off is Cummins India. What's your own sense when it comes to these players? Because just the last quarter, wherein there was a bit of a disappointment, the stock actually did well, factoring in that maybe the worst is behind. But what's your own sense on this particular space, and any stock that you like at this point in time?
So once again, I think the capital goods industry for the last 1.5 to 2 years has been, a kind of buoyant, largely on the expectation that the capex cycle is going to give a good multiplier impact. And some or the other, that has not really happened in any serious way, as what we all can see. There's no doubt that most of the cap goods companies have done well, whether you say Siemens, ABB, Hitachi, you name it, and Schneider, everyone, most of them have really done pretty well, and they have had a very good move. So I think maybe the interest will still continue, because I think this expectation of the capex cycle being played out may not happen immediately, but I think the expectations will still ensure that the stock and the sector remains very much in the limelight. So I would say that yes, I would certainly hold on to the cap goods sector, because I think that's one sector which possibly can see some action in the times to come, maybe over the next 3 to 4 quarters. So I remain quite upbeat on this particular sector, and I think some of the stocks like Siemens Energy, I think Hitachi Energy looks pretty good. I think Larsen and Toubro in particular, I would make a mention. I think that's another stock which has been quite resilient, And I think the way it has got the order books and the expected flow of orders, so I would continue to be bullish on this. Cummins India, I'm not too sure about it at the moment. I think their exports still continues to be in the gray area of what if, so many things are yet to play out. So Cummins India, I would reserve my comments. I would not be in a hurry to buy this particular stock. But otherwise, on an overall basis, yes, I'm upbeat.
Okay, so upbeat on cap goods, and L&T is the stock that Dilip is liking the most from that space. But let's shift the spotlight to chemicals now, because Niti Aayog has recommended a slew of measures to boost chemical industry. Let's go across to Sharad to know more about the proposed policy interventions and the potential impact by 2030. Sharad.
A very interesting development coming in for the chemical sector, as Niti Aayog has released its paper on the industry as well. Now this is important because this formulation paper has taken a lot of recommendations from the ecosystem, and this might be presented to the parliament as well, and this might lead to India's first PLI scheme for chemicals and a re-rating in the sector. Now, looking at the key details, the proposed policy, they are focusing on establishing a world-class chemical hubs and developing port infra and also giving an OPEC subsidy. Interestingly, they are expected to fast forward the environmental clearances and also secure FTAs to support the industries. There are key targets which are very important to know. First one is a net zero India trade balance in chemicals by 2030, a 5 to 6% production share in the global value chain, and almost 700,000 additional employment. Looking at the numbers, $220 to $280 billion of Indian production of chemicals and a $35 to $40 billion of additional exports as compared to the numbers in 2023. The OPEC subsidy would be 65,000 crore rupees over the next 5 years, and additional 3 lakh crore turnover is expected to come in from these incentives. Now looking at India and China, how does the overall global trade stands? India is coming in at exports of 3% and imports it's 5%. What's for China? It is roughly 23% and 12% respectively. So what would be India's chemical market consumption? As per the report, current size is roughly $220 billion. It can go up to almost $850 to $1,000 billion by 2040, with the India's share going up from 3.5% to 10 to 12%. Lastly, the segments looking at the growth, specialty, inorganic, petchem, all of them are looking to grow between 8 to 11% on a CAGR basis till 2040 as well.
To make India a global export hub, to position India vis-a-vis China. There, we need to work on a lot of things like infrastructure, free trade agreements, even getting the foreign companies invest in India. So all in all, government wants to position India as an alternate to China. Then companies in the bulk chemicals space, companies like Deepak Fertilizers, companies like Deepak Nitrite, GNFC, they will be major beneficiaries because these have products which they produce in India but are not able to sell because of the Chinese dumping. So what government needs to do is invite these foreign companies to invest in assets in India. If PLI does not go through, will be the similar set of cycles we are seeing, the volatility. One quarter, the companies would do well because Chinese companies are not active in the market. Another quarter, we are not doing well.
All right, so that's about the chemical space. Niti Aayog's long-term target set for the industry, as well as how the Indian companies can actually perform in the times ahead, is something that Ajay tried to decode for us. But Dilip, with this, would like to thank you for taking the time out today and speaking with us this afternoon. It was so good to have you on the channel.
Always a pleasure. Thank you so much.
All right, moving on then, let's actually now look at the AMFI's recategorization that will be valid from August this year to January next year. Now, which are the stocks that will be moved around? Varun is here with all the details on this one. Varun.
Well, so AMFI has released a list of stocks which would be actually shifted from one segment to other segment. The categorization that would be valid from August of 2025 to January of 2026. Now, because of this recategorization, the overall market cap for the cutoff has actually been changed. For large cap, now the overall cutoff is 91,600 rupees versus 1 lakh crore in the December recategorization that was earlier done. For the mid cap, the threshold has actually now declined to 30,800 crores from 33,200 crores, which was done in December 2024. large cap now will account overall 61.3% of the total market versus 62.1% earlier. Mid caps would account for 19.2% of the total market versus 19.6% in the December review, and small cap will now represent 19.5% of the total market versus 18.3% earlier. Now the stocks which have been moved from mid cap to large cap, that consist of Indian Hotels, Mars Godok, Max Healthcare, Apollo Hospital, Lupin, JSPL. These are some of the names. The stocks which would be moving from large cap to mid cap consist of Hero MotoCorp, Cummins, Swiggy, Polycab, Dabur, NTPC Energy. These are some of the names. The stocks which would be moving from small cap to mid cap consist of Narayan Rudale, Laurus Lab, Shola Finance Holdings, Radico Khaitan, and the stocks which would be moving from mid cap to small cap, they include Ola, IGL, Deepak Nitrate, IRB Infra, Tata Tech. These are some of the names which will be moving from mid cap to small cap. But let me tell you that the changes would be effective from the month of September, and this list is for August to January of 2026.
Right, okay, Varun, we'll leave it at that. That's the Amphi rejig, which is on the anvil. We'll take a very quick break on that note, but come right back. We'll continue tracking the last half an hour of trade this afternoon. Back for closing trades right here on 18 hour, and index level, really nothing has happened. In fact, not just us, pretty much across the global markets, that's exactly the move. Of course, not the case for the US equity markets. Remember, they're going to be opening after a good day and a half along with the weekend break. So quite a few days that they've been off. They seem to be headed in for a little bit of a weakish start. The Nasdaq futures currently lower by about over 140 points. S&P down about almost 0.5%, and the Dow futures as well are indicating about an 81 point downtick as we speak right now. But other than that, most global markets are pretty lackluster. That's how Asia shut shop, pretty flat. For Shanghai, Hong Kong as well was absolutely flat. Same is the case with our markets, and Europe as well. Though it's picking up a little bit, but it's largely pretty relatively quiet itself. Varun Sabutu joins in on the show right now. Varun, hi, afternoon. Good to have you on the show. Do you think the index is headed in for some more days of consolidation, or is it pegging for a move up or down?
Yeah, hi. Thanks, Edino team, for inviting us on your show. I would just like to re-mention my positive stance as I've been coming on your show, and every time I've been coming and talking about it. I think, this consolidation, if anything, is an opportunity which one is getting. We can clearly see in the underlying, if you do a proper bottom-up, and if you look to own stocks after looking at bottom-up ideas, one could make good money. I think there is good enough move coming when it comes to stock ideas on a bottom-up basis. I don't see any reason why one has to be negative on the markets currently. If we have to see the industry heavyweight sectors, something like an IT pack or say consumer pack, or overall consumption discretionary, BFSI, the outlook for all of them remains quite optimistic, honestly. So I don't see a reason why one has to be thinking twice in terms of how markets can rally. I hear a lot of arguments where people talk about Indian markets being expensive. They are expensive and they will remain expensive for the right reason of growth. So yeah, that's my take on an overall market basis.
All right, hi Varun. Afternoon. This is Shrishti also joining in. But off late, a lot of sector turning at play, and at least for today, we are seeing the defensives making a comeback. Help us understand how are you seeing the money flowing in which sectors do you see the move upcoming, or rather the fund flow is actually getting more inflows right now and getting attractive?
See, honestly, defensives are rallying because there has been some correction it's basically more of a catch up, honestly. I mean, some correction in the valuations is what I meant. But honestly, I mean, across sectors, if I see, there's no reason why we shouldn't be optimistic. When it comes to, say, infra capital goods, we have seen a lot of activity pick up in the last 6 months, 9 months, versus the lull we had seen before that, right? So things moved on that front. Then we had these series of cuts that we have been seeing, rate cuts. We saw a lot of liquidity push from the RBI. That gives a lot of positive fillip to BFSI over a longer term. NBFCs benefit in the near term, and banks benefit over a period of time. I think BFSI also has been seeing good enough flows that we have been seeing stocks performing quite well, particularly the PSU banks, that we saw sharp rally in which happened, which we saw after the policy. They all rallied more than 10%, 15%. I think there is a catch-up pending. Generally, the expectation was that generally the quarterly for this particular quarter could be weak, but going forward, things look very optimistic from a BFSI perspective. So I think if anything, there'll be opportunity. If there's any opportunity, one should grab it. One should look at accumulating these names out here. Then there is this entire consumer discretionary space. Honestly, there has to be a lot of merit to own these names. There has been this 12 lakh rupee tax change, which is yet to show. We know about the rate cycle that rates have been on a cut. All these things are extremely pro-consumer. So I see all these heavyweight sectors doing well. And in addition, lastly, the IT sector, which is more about a play on the US economy. I think we are seeing some resolutions happening in terms of the trade. We are seeing some optimism around rate cuts there as well. So from their economy also, things should start shaping up well. I'm quite optimistic across sectors right now. I don't see any reason to be more skewed towards defensives or more skewed towards growth stocks. I think all of them should perform, and that's where we are extremely positive. Our house call is that index will be at 29,000 soon.
Okay, 29,000, that sounds optimistic given the way the market has been, rather flattish for the past more than a couple of trading weeks. But Varun, hi, this is Nehi also joining in. Along with FMCG and realty, you also have power stocks and oil and gas that have now made their way to the green. For oil and gas in particular, do you believe that all the good news is already priced in, or do you still believe that there is some room of investment here?
See, oil and gas is a very interesting opportunity, right? I mean, with the way crude has been, this is the best situation that one can have from an Indian markets perspective. Plus, we are going on hearing statements from OPEC nations, etc., where they are going on talking about increasing their production. So, for example, for this month, they have spoken about this was yesterday night's news, where they're talking about producing more 458,000 barrels, which puts pressure on crude overall. Reliance, we keep hearing that Reliance has been sourcing a lot of shale from the US, right? So that is again helping prices of crude and oil from from India's perspective. I think OMCs stand to be interesting bets out here. I don't see a reason why crude is going to shoot up anytime in the near future. We saw a little bit of a shoot up when this entire Iran-Israel thing happened, and after that it has come back to reality. So I don't see any reason why one has to worry around oil and gas sector, but one has to play it through OMCs and not so much from the upstream side, right? And obviously Reliance also falls into this space, and I think for Reliance, all of their business verticals are doing exceptionally well. So I see clear cut that all of these companies will keep performing. Oil and gas will remain in flame.
All right, so oil and gas, that's the sector to be, and specifically the OMCs that can actually do well. But Varun, since you have such an aggressive target on Nifty, that's 29,000, how do you see Reliance participating in that? Because of late, Reliance has been one of those interesting plays, have seen a good recovery from the April lows. A lot of news flow has started trickling in. So how do you see the move on this heavyweight?
See, for Reliance, I think from a telecom perspective, if we see Jio has been doing quite well for them. You can look at how Bharti Airtel's performance has been. So that part is going very well for them. Their retail business should see a lot of traction considering the fact what I just mentioned, what I just mentioned about how consumption should pan out going forward. And lastly, the oil and gas piece, which we spoke about, that oil and gas looks pretty good. So all three engines should do well for them. And that's the reason why I'm saying that I expect index to be supported by Reliance, oil and gas overall, IT, BFSI, consumption durables, and all of the other sectors are also going to work in tandem with it. Also the infrastructure space in India. So I'm that way quite bullish, and I don't see a reason why index wouldn't be there at 29,000.
Varun, what's the expectation from the earnings though? Where do you think the meaningful upside revisions and downgrades would come in?
See, the good part about this earnings is that the expectations are quite low. I think you will see more surprises on the positive side in the BFSI space because expectations are quite low. The commentary of most companies just before the silent period was quite somber. So you will see things working out better, say in BFSI. IT companies, if you remember, in the last quarterly, that was the peak of the negative noise where we were hearing a lot of issues around trade war, etc. And that's when, say, the industry leading companies like Infosys, etc., had come and cut their guidance sharply. So most pessimism is there, that's why I see that across sectors you'll see some positives coming. Rather than any negative surprises coming. Not that the expectations are too high, so I think the second half of the year is going to be very strong from the overall year's earnings perspective. But yeah, near term, at least in this quarter, I don't see companies disappointing on numbers because the commentary has already been quite weak on the corporate side.
So that's the take, but let's once again shift focus to the charts and talk about technicals. And Aditya, what are you making of some of these real estate counters that are in the green? They have been in the green for the most part of the trading day today. Names like Brigade, Prestige, Lodha, they're doing pretty all right for themselves given the overall market breadth. How are these stocks looking like on the charts?
They're actually looking quite good, Snehi. So it's a very stock-specific move that we're witnessing in the real estate space. And I think so this up move that we're witnessing in the real estate space is likely to continue for these names that you just mentioned. Prestige Estate looks very good to me on the chart setup. It's actually formed a decent base, kind of a double bottom in Friday's trading session. It was a hammer pattern as well. So from here on, I think overall the chart setup is also good. I think stock can easily test levels of 1900 on the upside with a good support on the downside at 1550. This is one stock that we've been recommending, and I think so should continue to do well. The second, Lodha is also looking very good. I think so after a decent bit of a cool off, stock is again headed higher to levels of 1550, 1600. Ajmera Realty is also looking good in the space. So this is also one stock which after a decent bit of a correction did take support at its key moving averages. From there, it's moving higher. So 1,000 rupees on Ajmera Realty is also something that can be seen. And one stock which was recently listed in this space that is also looking interesting. So all these real estate names which do look interesting, I think so can see a decent bit of an upside.
Interesting. For now, of course, it's really pharmaceuticals which is actually gaining ground. FMCG after the quarterly updates, that's where you're seeing some traction come by. Reliance interestingly is holding up about another 1%. It's had a decent last few days, and it's now scaled back to that 1545 odd level. And Asian Paints as well. Kunal, in fact, you were flagging off Asian Paints, right, earlier today. Do you sense that the stock may have bottomed out for the year ahead?
Yeah, looks like, Aisha, because the stock tested this 2100, 2150 level twice. In the first leg, the stock took almost 3 months to recover and come back to 2500 mark. In the second attempt so far, the stock has taken less than 1.5 odd month to try and come back to this 2500-ish odd level. So this indicates that we are looking at a now fierce bottom for Asian Paints. My sense is that the stock should be able to break past about the 2500 levels over the very short term. And on the upside, I would actually look at 2700, 2800 range for Asian Paints on the upside. So a substantial upside could be there for the stock over the near to medium term.
Right, so that's about Asian Paints. A substantial upside could be in the making. Let's watch out for that. But on the bottom of your screen, you also have the June general insurance data as well, wherein the general insurance premium has actually seen an uptick of over 5% on a YOY basis. And I was also seeing the data coming in from New India Assurance as well, which has seen an uptick of 10.5% in their premiums on a YOY basis. So let's watch out for that stock, and you can see the spike on the stock price as well. But moving on to another news flow, wherein the Delhi High Court has dismissed a plea by Turkey-based Celebi Airport Services challenging the decision of Bureau of Civil Aviation Security revoking its security clearance in the interest of national security. My colleague Samir is here with more details on this one. Samir?
In a major setback to Turkish ground handling firm Celebi, Delhi High Court in its verdict has upheld the central government decision to revoke the license of Celebi. So Delhi High Court has dismissed the Celebi's petition that was against the BCAS order, Bureau of Civil Aviation Security's order to revoke the Celebi's license, which is there for ground handling services. And this revocation of Celebi's security license was on the grounds of national interest. So the order that was given by BCAS in the month of May, it mentioned that seeking the national interest, the security clearance of Celebi, it has been revoked with immediate effect. And let me also add over here that this entire development or the step came in during the Operation Sindhu when it was carried out, and Turkey actually extended the support to Pakistan, and post which there was a significant development in the aviation space that BCAS under the Ministry of Civil Aviation revoked the security license of Celebi, and this was challenged by the Turkish firm in Delhi High Court. But now, after a series of hearing, Delhi High Court has actually upheld the central government decision, and which is a major setback to Celebi. Now, let me also tell you that Celebi is present in over 9 airports across the country. But yes, this means that this is going to have a major setback. But also over here, there are a couple of other pleas which are going in different high courts as well. For example, in Madras High Court, a similar kind of hearing is there. A petition has been filed by Celebi, and in that case also a next date of hearing that has been given for August 4. But in Delhi High Court, they have definitely got a setback, and Delhi High Court has actually dismissed the petition filed by Celebi Aviation.
Okay, so negative news coming in for Celebi because Delhi High Court has just quashed their plea. That's the latest update coming in on this case. Amir, thank you so much for joining us with all of those details. But time now to get in some BTST ideas by our technical experts. And Kunal, you go first. What would be your BTST picks for the day?
So I'll go with 2 buy calls, one from the pharma pack, Sun Pharma, more of a preemptive contra buy, expecting the stock to get back into a swing breakout mode on the short-term charts. So 1710 is a target for Sun Pharma, stop us at 1650. And Apollo Tyres is something which has bounced back from its critical moving average on the short-term chart. So I think at 460 level thereabouts, it looks fairly attractive. Targets of 480 is what I would peg for Apollo Tyres, and stop us at 450.
All right, so those are the buy calls coming in from Kunal. But Aditya, what about you? Which is the stock making to your radar?
I've got a couple of buy as well, Shrishti. So the one that I like is Cummins India from the capital goods space, I think. So this is one stock after a bit of a good consolidation phase has now broken out from a cup and handle pattern on good volumes in trade today. This up move is likely to continue for next 2 trading sessions at least. So I've got a target of 35.50 on the upside with a stop loss at 33.50 on the downside. I have a buy recommendation here. Second is Petronet LNG. After a decent bit of a consolidation, stock is now getting up for a breakout from a downward sloping channel. So at current levels, I'm preempting a breakout on the upside in a day or two in Petronet LNG. So I've got a target of 325 to about 340 on the upside with a stop loss at 297 on the downside.
Kunal, what about IT? And I ask because, come Thursday and we'll have TCS declare its numbers and then, so on and so forth. TCS, of course, will report its numbers only post-market hours. So Friday morning is when we're going to be reacting to those earnings. But do you see anything material on the charts? While they may have lifted off from the 52-week lows, but can they finally make up and catch up with the rest of the sectors?
Well, I think what the markets and the positioning right now shows, Aisha, is that markets are waiting for the results to be out. I think before that, they would want to commit positions into many of these IT names. So what we've seen is that most of the IT stocks have just gone into a very listless kind of a trading range, whether it's large cap names like TCS, Infosys, Wipro to a larger extent, HCL Tech, Tech Mahindra, which are a slightly more high beta, larger cap names, or even the mid cap end of the mid cap end of the IT stocks, where you've seen Coforge, L&T Infotech, Mindtree, Technology Services, etc. I think these stocks have more or less gone to their individual sideways trading ranges. There is no major volume pickup, and these stocks are gradually going into a zone where the indicators have come back into neutral territories for these names. We've seen RSIs of 40, 45 thereabouts for many of these IT names. That generally is an indicator that traders are not looking to build extremely high positions over here, and they would want to maybe get a precursor of individual results for these large cap IT names. And I think once that starts off, and assumingly if the initial tone is on the positive side, then I would believe that you might probably see a perk up into many of these other IT names. So I think it's more of a wait and watch for the IT stocks, and eventually post results, the volume flow would probably decide that whether we are looking at a trend picking up into the IT pack or not.
All right, so that's the take coming in on the IT space. But Aditya, although the Nifty Bank as an index was trading in the red for majority part of the day, but one of the counters, that is Kotak Mahindra Bank, that is showing a good uptick in today's trading session. A 1% jump is what I'm seeing, and it's the second straight day where the stock is seeing a bit of an uptick. What do you make out of it? And because the banking index is not doing that well, but Kotak Mahindra Bank is going just the opposite. So what's the sense that you're getting on this stock?
So Shrishti, it's more of a buy in your portfolio and hold it, because we are seeing this stock going up after a very long consolidation phase. We've seen years when the stock hasn't done much for itself. Then eventually we had a breakout in the stock, test levels of around 2290, 2300 on the upside. And from there, it entered into a consolidation again. If anything, I think this is an opportunity to initiate a fresh long in the stock at current levels. If you want to place a stop loss somewhere around 2050, 2100, it's a good support area for the stock. And my sense is from medium to longer term, you will see the stock hitting levels of 2600 on the upside. So within the large cap banking space, I think there are two stocks which clearly stand out for me in the private sector space, the Kotak Mahindra Bank and HDFC Bank. And I think so both these stocks should be in your portfolio. Matter of time before you will see another 15 to 20% kind of an upside in both these stocks if you hold it for at least a year or so. So definitely it's a very good looking chart setup, and I think so one should add at current levels also Kotak Mahindra Bank.
I want to check in on trend. Of course, this was the big crack in Friday's session. The stock fell about almost 11% after the management indicated that in their quarterly update, and that quite didn't go well with the markets. But right now, it's some stability, one can say, although it's pretty erratic. Even right now, just about hovering around that 5,500 odd mark. That's trend in a trade for you. Can I just very quickly check on the charts and whether it can go back to those 4,500 kind of lows that it did strike, I think, March end or so?
Yeah, but I don't believe, Aisha, that the stock should be good for 4,500 levels. In fact, the stock has gone through a major grind, and in the last 5-6 months back, there was a major price correction for trend. The stock in I think a matter of a week or so had fallen back from 6,000 to 4,600 thereabouts, where it formed a major low end of March 2025, and from there the recovery was very slow, gradual, and it took its own time for trend. These are the kind of recoveries which generally tend to last quite long. After this kind of a price correction which we saw last week for trend, where the stock was down 10-11%, I don't see any major follow through downside for the stock price. Yes, eventually, over the next 1 or 2 weeks, we may see another 100-150 point kind of a price correction, which could be more like an inertia correction for stock prices after such kind of a sharp drop. But then eventually they come back into much higher support territories than the previous leg. So I would believe that 5,200, 5,300 level for trend should actually be taken as a very good counter opportunity for traders to build long positions.
Okay, so that's the take on trend and the overall sector as well. But Aditya, as we wind down for today's trading session and the kind of move we've seen on the Nifty, we're trying to claw back into the green right now. Can we expect a muted session tomorrow as well?
Sneh, I think there could be a bit of an up move into tomorrow's trading session, if anything. I think one should, and if you're a braveheart, I would suggest actually to go for a long trade on Nifty and see how market opens tomorrow. My sense is you will have a gap up opening in trade tomorrow. Could be a small one, but you will have a gap up opening, and markets should test levels of 25,700 maybe in a couple of trading sessions. So I'm bullish on the market from here on. With a stop loss at 25,400 on the downside, I would be a buyer in the market.
All right, but Kunal, are you also anticipating a gap up start for tomorrow?
I think maybe a 40-50 point gap up for the index, but not much in terms of the index moves, largely because I think the markets are just waiting out for maybe the first phase of the outcome in terms of results. I think that would probably decide the tone of the market in terms of trend. But I strongly believe that this 200 point dip, 250 point correction, what you've seen the last 4-5 days for the index, I think all of these dips are very good opportunity for contra traders to try and build long positions. So it's more of a gradual building of long positions, which one has to do rather than playing for those very tepid upsides of 40-50 points on the index.
All right, so that's the take on the index coming tomorrow. But one of the other stocks that we have been flagging off is New India Assurance, because we just had that June general insurance data. And Kunal, a quick chart check by you. New India Assurance, the stock was absolutely flat now at the day's highest point with a 1% uptick. How do you see the setup of this particular stock?
Yeah, it's been an okay chart, Srishti. It's not as if that the stock has done any major price uptrend in the last 2-3 months. Prior to that, the stock had corrected from 300, 320 levels in 2024, had come back to 140, 150 mark, and now from 150 levels, the stock has seen a mild bit of a pullback. I called it mild because of the way the stock had corrected more than 50% in the in the last 6 months. So I think in that sense, maybe these kind of news flows could probably just about keep the stock afloat above its critical short-term moving averages, but nothing major in terms of the chart pattern to call it as a reversal or a trend on the upside for New India Assurance.
Are there any trends in particular you think would continue tomorrow too? Maybe IT, undertake, or rather IT profit taking, defense profit taking, or for that matter FMCG outperformance. Any continuation in the trends that you foresee from today?
I see an FMCG continuing to outperform Aisha in trade tomorrow, and I think so. Defense could make a comeback in trade tomorrow. A couple of defense stocks are actually looking strong. My sense is you will see defense stocks actually coming back tomorrow. Names like HAL looks interesting to me. BDL, BEL, all these stocks I think so can make a comeback in trade tomorrow. And my sense is these FMCG stocks are likely to continue its up move. I would also watch out for some of the metal names, especially names like Tata Steel, JSW Steel, and Jindal Steel. These three stocks, I think, if they start somewhere flattish to mildly bullish, they can actually see a good up move, because in late trade, I'm seeing a bit of a short covering rally in some of these stocks.
Okay, so that's what the trade setup for tomorrow could look like. On that note, Kunal and Aditya, thank you so much for joining us and sharing your take on the market with us. But with that, only a couple of minutes left. Let's start winding down for the day. And absolutely flattish moves coming in for the Nifty. You have a mild uptick, if you could call it that. But yeah, that's the way I think we're shutting shop for the Nifty. Looking in the green for now, a tad bit of a ray of positivity coming over there. Similar moves coming in for Sensex. Advanced decline ratio still quite in the favor of the declines today, but you have India VIX that's spiked up 2.5% in today's trade. So that's going to be an important metric to watch out for. Pressure continues on Nifty Bank because that's ending in the red. A 0.2% cut still continues on Nifty Bank. So that's the way the market is closing for the banking names. But from the benchmarks, you have HUL, Tata Consumer, Nestle. So clearly the day of FMCG outperformance on the market, because you had good updates coming in from Dabur, very strong from Godrej Consumer as well. So on the back of that, the entire consumption pack was shining bright today. Other than that, you have Aisha, Jio Financial, Asian Paints and Kotak doing bank from Nifty 50, doing well from Nifty 50. What's not doing well today is BEL, Tech Mahindra, ONGC, Ultratech, Grasim, HCL Tech. All of these stocks are under pressure in today's trading session. But if you take a look at the sectoral moves today, of course, following FMCG, you have Nifty Energy that's managed to eke out gains for themselves on the back of this Petronet LNG upgrade note coming in from Motilal Oswal. But barring both of these sectors, everything else is shutting shop in the red, led by Nifty IT, almost 0.8% cut, followed by metal, realty, pharma, PSU banks and auto. So that is what the market breadth is looking like in today's trading session. You will have pharma that is closing in the red after 11 days of closing in the green. So that's a first for pharma in a very long time. Other than that, if you take a look at some top gainers today, you have Adani Power that's done well, Britannia from the consumption space, and Varun Beverages have done well today along with Tata Consumer, IOC, PNB, BPCL. So a lot of these counters that are related to crude prices, the likes of BPCL and IOC, they have done well in today's trading session. And what has largely tanked today is Info Edge on the back of the weak numbers coming in. A 3.7% cut coming in because weak billings is what we have seen. Havells too under pressure today. You have Tech Mahindra that joins that lot. ONGC, of course, on the back of falling crude prices and upstream companies. So ONGC also in the red. But that is how we are shutting shop for the day. Nifty is absolutely flat. We'll give that rate some time to settle. Looks like we're closing just about in the red, but once again, we'll see. It looks like an absolutely flattish close for the benchmarks today. But on that note, we'll wrap it up on this edition of Closing Trades. From Shrishti, me and the team that put this show together, thanks so much for tuning in.